Welcome to The Explainer. Today we're jumping into something really strange happening in the silver market. It's a paradox where the story you hear on the surface and what's actually happening underneath are two totally different things.
So let's just get right to the heart of it, the main puzzle. The rumor mill is churning out stories about small investors panic selling their silver, but at the exact same time, prices are shooting through the roof. So what is really going on? As we're about to see, the truth is often hiding in plain sight, right behind the numbers.
And to put this into perspective, we're talking about a staggering 131% price surge in just the last 3 months. Now, this isn't just a little blip on the radar. The source material calls this a biblical move. In fact, it's the biggest jump we've seen since the financial crisis way back in 2009.
Okay, so first up, let's look at that surface story. Let's dig into the evidence for this so-called panic selling and figure out why there's so much confusion in the first place.
So the story you keep hearing everywhere is that the everyday retail investor, the mom and pops, are all rushing for the exits, trying to cash out, and supposedly flooding the market with silver.
And at first glance, it kind of looks legit. You've got major dealers like TD Precious Metals that have actually had to suspend sales of some of their most popular products. Giants like JM Bullion are showing items as sold out for weeks on end. They're all saying it's because of immense market activity and just being overwhelmed.
So yeah, on the surface, it looks like a slam dunk case of a retail sell-off, right? But hold on a second. If that were really true, basic supply and demand tells us the price should be tanking, not going to the moon. And this, right here, is where the story gets really interesting.
Which brings us to the million-dollar question. If mom and pop are supposedly selling, who in the world is on the other side of that trade? Let's follow the money trail, shall we? Let's see who's actually soaking up all this silver and pushing prices to these historic levels.
I mean, just look at this. This is the whole paradox in a nutshell. A huge sell-off from small investors on one side, and the biggest price surge in over a decade on the other. It just doesn't add up. The math makes no sense.
And here is the big reveal. According to the source, it's not the small retail guys driving this thing. The real demand, the heavy lifting, is being done by much, much bigger players. We're talking foreign governments like China and India, huge institutional investors and sovereign wealth funds. They're the ones reportedly buying up physical silver at a scale we've never seen before.
Hey, just a quick pause here. If you're finding this breakdown insightful, do us a quick favor and hit that like, share, and subscribe button. It really helps us out, and it means you won't miss what we've got coming up next. So the next logical question is, why? Why are these massive players making such huge moves right now? Well, the source material connects this to a much, much bigger story, a potential crisis of confidence in the entire traditional financial system.
And this isn't just about silver anymore. It's about a growing loss of faith in fiat currencies, the money we use every day. When that confidence starts to crack, the smart money starts looking for a safe place to go, for hard assets that can't just be printed into existence.
And to pour a little gasoline on that fire, there's a growing theory that an entire era of artificial price suppression might be coming to an end. For years, the claim is that big players used paper silver contracts to keep the price artificially low. But now, the demand for actual physical silver is getting so huge that it's threatening to break that system. We're hearing reports that the big COMEX exchange is struggling to actually deliver the physical metal, and that top traders are even getting fired for betting against this price explosion.
So, with all these incredible forces clashing, where in the world could the price of silver go from here? Well, the source turns to the math and the market's own volatility for a forecast, and frankly, the potential numbers are pretty staggering. Yeah, it's worth taking a second to appreciate just how wild the ride can be with silver. Its implied volatility is more than 3 times that of gold. Now, in simple terms, that means the market is expecting massive price swings, both up and down. Think of it like this. Gold is like a big, steady cruise ship. But silver? Silver is a speedboat in a hurricane. So what does all that wild volatility look like in actual dollars and cents? Well, this table gives us a pretty good idea. A normal market swing, what analysts call one standard deviation, could land silver anywhere between $96 and $140. But if things get really crazy, a more extreme event could push the price as high as $188 or drop it all the way down to $40. Now, I know what some of you are probably thinking. Hey, haven't we seen this movie before? What about that huge price spike back in the 1980s? And that is a totally fair question.
but the source material argues that comparing then to now is like comparing apples and spaceships.
Okay, you might want to sit down for this, because these numbers really put things into perspective. To reach the same relative peak as it did in 1980, when you adjust for the amount of money in the system today, silver wouldn't be at $100. It would have to be over $1,000. And if you compare it to the stock market, get this, an incredible $2,796 an ounce.
So, we have chaos, we have insane volatility, and we have two completely different stories fighting it out. What is the bottom line here? How do you even begin to navigate your way through this kind of fog?
The source material boils it all down to a pretty clear three-step game plan. Number 1, ignore the noise because the rumors are there to manipulate you. Number 2, do your own homework and verify everything before you act. And number 3, think like a long-term investor, not a short-term trader who's reacting to every little panic.
And this last piece of advice is maybe the most important of all. You have to understand the purpose of all that market chatter. It's often designed specifically to get you to act emotionally. The goal is to separate you from your valuable assets as cheaply as possible, to, as they say, shake out the weak hands. So we'll leave you with this final thought to chew on. As the foundations of the old financial system seem to be shaking, the debate over what a true safe haven really is has never been more important. What do you do when the numbers are screaming one thing, but the headlines are whispering something completely different?